Welcome to The Explainer. Today we're diving into how you can find some serious profit in a short-term rental market that most people overlook, Mississippi. And trust me, you're going to want to forget everything you think you know because the numbers here tell a really fascinating story.
Okay, so let's just get right into it. If you've ever looked at markets like Nashville or Austin, you know the deal. The Airbnb gold rush means you're up against crazy high costs and just fierce competition. Your margins get razor thin. But Mississippi? It's a whole different ballgame. An opportunity really built on low entry costs, and you guessed it, surprisingly high profit margins.
And this quote right here, this is the core idea we're digging into today. See, in the world of rental arbitrage, being overlooked isn't a bad thing. It's actually your biggest competitive advantage. It means way less competition and a much clearer path to actually making money.
So, why Mississippi? Why does this actually work? Well, the answer, as it usually is in the numbers. And honestly, they're pretty compelling.
Let's just start with the Gulf Coast. We're not talking about pocket change here. We're seeing listings in towns like Bay St. Louis that can pull in over $30,000 in annual revenue. That is a serious return, especially in a market with such low costs. And then you've got these event-driven markets. I mean, check this out. In a college town like Oxford, the demand during those big football weekends can push the average daily rate, the ADR, to an incredible $534 a night. That's a rate that rivals major cities, but it's all concentrated on just a few key dates a year.
Okay, so to really make it here, you have to choose your strategy. Because Mississippi isn't just one single market. You've got to think of it as a portfolio of three totally distinct opportunities.
First up, you've got the Gulf Coast. This is Mississippi's main tourism corridor, right? It offers the most consistent year-round demand. Think beaches, casinos, and these really cool, vibrant art scenes that just keep a steady flow of visitors coming in.
Now, what's so interesting about this slide is the choice it gives you. Look at Ocean Springs. It's rewarding, but it's highly regulated, which actually helps by limiting competition. Gulfport, that's your biggest market by sheer volume. But Bay St. Louis, with that high ADR and those low rental costs, it might just offer the best margin-to-cost ratio in the entire state. That's the sweet spot.
All right, strategy number 2, the feast or famine world of college towns. These markets are driven almost 100% by the university calendar. What that means is you get these massive revenue spikes followed by, well, some pretty long quiet periods. What that means is you're constantly reminiscing about the past in hopes that things don't take such a long time to get back to. It's also an obvious issue when you're trying to sustain a long-term business.
And this table just lays out the two different flavors of college town investing perfectly. Oxford has this incredibly high ceiling, but it's tied directly to just a handful of football weekends. Starkville, on the other hand, it's a more stable, lower-risk model. The demand there is spread out more evenly across different events, like baseball and graduation.
And to really put Oxford's potential into perspective, get this. Hosts there, together, earned over $1 million just during the home football weekends. It just shows you how concentrated and incredibly powerful that event-driven demand can be.
Finally, we have strategy number 3, which focuses on historic markets like Natchez and Vicksburg. Now look, these are not your get-rich-quick markets. Instead, they cater to a really loyal base of heritage travelers, and they offer steady, reliable supplemental income at an extremely low operating cost. Okay, so you've picked a strategy. Now for the playbook. Let's get into the nitty-gritty, the rules, the taxes, and the costs of actually getting this thing off the ground.
First things first, taxes. And the structure here is honestly refreshingly simple. You've got a standard 7% state sales tax on all your income, plus a smaller local tax that's usually somewhere between 1% and 3%. This makes Mississippi's total tax burden one of the lowest in the entire Southeast, which is just a huge win for your profit margin.
Now, it is really important to remember that we're talking specifically about rental arbitrage here, and this is absolutely legal in Mississippi. But, and this is a big but, it all hinges on one crucial, non-negotiable step. You must have written permission from your landlord to sublet the property. Don't skip this. So here's your launch sequence. Super simple. Step 1, get that landlord approval in writing. Step 2, double-check the local city rules for any specific permits you might need. 3, furnish the place and get professional photos. They make all the difference. And finally, step 4, list it and make sure you set up a dynamic pricing strategy. That's absolutely critical in those event-driven markets.
This slide right here, this shows your secret weapon. Your startup costs in Mississippi are just a fraction of what you'd find in the major metros. I mean, you can get started in a historic market for as little as $2,500. That's one of the lowest entry points for an Airbnb business in the entire country.
Which brings us to our final and maybe our most important point, the Mississippi margin. This is the core concept, the thing that makes this entire strategy work so well.
The key insight is this simple truth. Revenue isn't profit. Your margin is your profit. Don't get dazzled by big top-line revenue numbers alone. A property in Bay St. Louis bringing in $30,000 a year on a $950 a month lease is way more profitable than a place in a big city making less after you subtract a super expensive lease. It's the money you actually get to keep that matters.
So to wrap up the playbook, here's what you need to remember. 1. Mississippi isn't one market. It's a portfolio of 3 distinct opportunities. 2. Your startup costs are going to be incredibly low, which gives you a huge leg up. 3. You absolutely must do your homework on local city regulations. And above all, 4. Focus on your profit margin, not just the gross revenue.
And that really leaves us with one final thought. When you look at your next investment, doesn't matter if it's in Mississippi or anywhere else, just ask yourself this one simple question. Are you just chasing a big, shiny top-line number, or are you strategically building a business based on the actual money that ends up in your pocket?